Welcome to today's cryptocurrency news. Cryptocurrency prices today.
The price of Bitcoin, BTC, to US dollar, USDT, has increased by -2.21% compared to the previous day, while the price of Ethereum, ETH, to USDT has increased by -0.63% compared to the same day last year, and the price of Binance Smart Chain, BNB, to USDT has increased by -0.63% compared to the same day last year.
Latest news.
Parsec raises $4 million and launches DeFi and NFT analysis product team. Parsec, a blockchain data analytics platform, has raised $4 million in new funding round. The round was led by Galaxy Digital with participation from Uniswap Labs Ventures, Robot Ventures, and CMT Digital. The funds will be used to expand the company's product offerings and user base. Parsec has also launched a new product called Team, which includes tools, a complete set of Parsec features, API access, and account management services. The company has opened its API to the public, whereas previously it was only available to invited participants. Stablecoin protocol Tangible experiences panic selling and decoupling. Tangible, a stablecoin protocol backed by real-world assets, has announced that all the liquidity in the USDR vault has been redeemed, causing the market value to shrink rapidly. The lack of DI for redemption has led to panic selling and decoupling, and the company is currently researching solutions that will be announced soon. The company is still using real estate and digital assets to support USDR redemptions. As of writing, the USDR price has dropped to $0.566, significantly decoupling from its intended value. U.S. senators urge Treasury and IRS to implement crypto tax reporting requirements. 7 members of the U.S. Senate have called for the Treasury Department and IRS to implement crypto tax reporting requirements as swiftly as possible. The lawmakers claim a delay in the implementation could cause the IRS to lose $50 billion in annual tax revenue and allow bad actors to avoid paying taxes. The crypto reporting requirements are scheduled to go into effect in 2026 for transactions in Ethereum. The measure was still open to public comments until October 30. JPMorgan's Onyx coin systems completes blockchain-based cross-border payments pilot with First Abu Dhabi Bank. JPMorgan's Onyx coin systems has successfully completed a cross-border payments pilot project with First Abu Dhabi Bank, FAB. The pilot phase was executed seamlessly, and response times were satisfactory. This comes after a similar test in Bahrain, where Bank ABC was testing the Onyx system and proceeding to limited services. Onyx has been used for euro-denominated payments in Europe since June and launched interbank USD settlements in India with a consortium of 6 banks that same month. JPMorgan was one of the participants in Project Guardian, which involved the creation of a liquidity pool of tokenized bonds and deposits for use in lending and borrowing. Jamie Dimon recently expressed his strong belief in artificial intelligence, but also called cryptocurrencies decentralized Ponzi schemes. Hacker behind Stars Arena attack suggests cooperation. Stars Arena suffered a $3 million hack, despite warnings from users, and the platform's smart contract address was found to be responsible. The token's value has decreased by 5%. In March, the individual responsible for Euler Finance's $5 million exploit returned over $100 million to the protocol and issued an apology via signed messages on different blockchain transactions. Intuitively, Bitcoin addresses used to sign a public message labeling Craig Wright a fraud and refuting his ownership of them. The Chainlink's token could be safest bet for investors seeking exposure to real-world asset tokenization. K33 research analyst David Zimmerman suggests Chainlink's native token, Link, could be the safest investment option for those looking to profit from the growing interest in tokenization of real-world assets, RWA. Link is expected to reduce costs, improve accessibility, and increase transparency for traditional financial assets such as private equity, credit, and bonds. Despite the challenges, Zimmerman believes the RWA narrative will trigger an isolated RWA crypto bubble. He advises investors to wait for lower prices to go long, pointing to the long-term support level at around $5.70. At the time of the report, Link was trading at $7.30, down significantly from its all-time high of $53, but up by 32% this year. Real USD stablecoin value drops after Treasury drained of DI. The value of Real USD, USDR, stablecoin, which is backed by real estate holdings, dropped to nearly 51 cents after its treasury was drained of DI. The entity behind USDR, Tangible DAO, published on-chain data showing that the treasury currently holds 0 DI. The treasury is also backed by the token TNGBL, but the project's trading volume is low and bid depth is too low on Uniswap, making it difficult to liquidate large amounts. Some traders are selling USDR in USDC trading pairs for pennies on the dollar. The website of USDR indicates that the project is offering a 6% yield. Bitcoin mining industry faces crucial moment amid ETF approval and record hash rates. The Bitcoin mining industry is at a critical point, with the approval of a spot Bitcoin exchange-traded fund, ETF, potentially triggering a rally. However, record hash rates and the upcoming block reward could threaten the industry's revenues and profitability. JPMorgan analysts favor mining operators that offer the best relative value, considering their existing hash rate, operational efficiency, power contracts, funded growth plans, and liquidity. The SEC has delayed its decision on whether to approve a spot Bitcoin ETF until this month. JPMorgan's top pick is CleanSpark, which offers the best balance of scale, growth potential, power costs, and relative value. The bank estimates the 4-year block reward opportunity at around $20 billion at current Bitcoin prices, but the looming block reward could impact profitability. Ether price could reach $8,000 by 2026, says Standard Chartered Bank researcher. Jeff Kendrick, head of FX Research, West, and Digital Assets Research at Standard Chartered Bank, predicts that Ether price will reach $8,000 by the end of 2026, with the platform's expanding use cases, including NFTs and DeFi, leading to increased demand. He also expects the Bitcoin, BTC, to lift the price of Ether in the short term. The bank's structural valuation estimate for Ether is $26 million. Digital assets and stablecoins, a return to larger currency blocks. Digital assets and stablecoins represent a return to historical trend of money being more international. These tools allow money to be placed on the open internet, breaking down borders and making cross-border commerce cheaper and easier. Stablecoins, issued by private companies, are borderless and can be sent as easily and cheaply as an email or text message. Nations may have opportunity to support international or regional adoption of their currencies by making them available as stablecoins, leading to a return of larger currency blocks. New paradigm proposed to bring Ethereum-style smart contracts to Bitcoin network. E-Search paper outlines new paradigm for Bitcoin smart contracts called BitVM. BitVM aims to bring Ethereum-style smart contracts to Bitcoin without making the network more complicated for other users. Protocol involves two parties, a prover and a verifier. Prover makes a claim and verifier verifies on-chain, with verifier able to take prover's deposit if any incorrect claim is made. BitVM is similar to optimistic rollups on Ethereum, with off-chain data management being massive and protocol only, involving two parties being a limitation. Bob Bodley, CEO of Bionic, compares BitVM to a limited version of the Ethereum virtual machine EVM, but acknowledges breakthrough with solvable issues. Efforts to implement smart contract capabilities in Bitcoin are not new. Developers have been trying to find ways around the network's limitations. BitVM is expected to fill in many of these holes in the next few months, with the protocol only involving two parties being a limitation. Jim Cramer continues bearish stance on Bitcoin amid contrasting views. Jim Cramer, former host of CNBC's Mad Money, expresses bearish views on cryptocurrency on Tuesday. He states that he cannot go out with gold because gold is not good and cannot go out with Bitcoin because Mr. Bitcoin is about to go down big. Despite the price of Bitcoin being up by 68% since the start of the year, Cramer has sold most of his holdings. Paul Tudor Jones, a billionaire hedge fund manager, also appears on CNBC and expresses support for both Bitcoin and gold due to geopolitical risk and rising U.S. government debt levels. Cryptocurrency options trading volume reaches 3% market share, setting new record. Foresight News reports that data from cryptocurrency derivatives analytics platform Levitas shows market share of cryptocurrency options trading volume has reached a 10-day moving average of 5%, setting a new historical high.
Thank you for watching today.
Bless the audience to make a lot of money in the currency circle. It is hoped that the audience can grasp investment opportunities, invest rationally, and earn reasonable returns. At the same time, the audience is also reminded that investment is risky and needs to be treated with caution, and they should not blindly follow suit or overtrade.